The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 17th Terrific Tuesday, often referred to as Turnaround Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way for you and I to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find that gift in every set of circumstance that life is going to throw at us. Today, you and I, we're going to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I as of just past 1 o'clock in the afternoon on the East Coast. And I want you to know that I'm absolutely grateful for your presence here. And I'm here to serve you, so feel free to pick up that phone, dial on in at any time at 877-927-6648. Of course, internationally, 727-445-1044. Would love to hear from you. Together, we can go take a look at whatever stock, whatever commodity, whatever currency pair, anything that you're looking at, correlation, and we'll try to figure out what the market is communicating to you and I. This is, of course, Terrific Tuesday. It's none other than Hotel California, sponsored by Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 79 points, trading at 17,562. S&P up about 8 points at 2,061. NASDAQ Composite up 26 points. She's traded 5,010. Russell's up 3.5 points. The DAX finished up 257 points. If we take a look at that DAX here real quickly, we're going to see that it moved right up into a level of resistance. Now, we take a look at resistance here. I'm just referring to the downtrend. So we're going to go ahead and use the top of the candle. We'll go ahead and use a red line. We're using the high from, looks like April 13, 2015. That's really our touch point. Actually, didn't even make it up to the resistance line. That's what it will do tomorrow. It should try to take on that resistance. Now, the price on that tomorrow is going to be somewhere around 11,000. Well, what we should really do is use the swing point. Well, there's a couple areas of resistance when we take a look at the DAX. Number one, you've got that one descending trend line. And the wicks of those candles are pretty small, so pretty close to the channel line as well out there. That's our diagonal resistance. We've got the gap down. So we've got that gap down from the trading session here of August the 12th. That becomes a natural area of resistance. It has not been tested, so we don't really know if it's resistance or not just yet. It should be resistance, but if in fact, not that line, don't pay attention to that line on the bottom there. So we've got really diagonal and horizontal resistance just ahead for the DAX out there. If it can close above, not the 11,151, that's really just the first area of resistance. It would need to close the gap entirely. That means the bottom of the August 11th session. So if we see the DAX close above 11,293, then that says, now that could be one heck of a huge, I doubt that this will happen. But if it did gap above 11,293, that would be one of your largest island bottom patterns that you could see out there. I doubt that's what's going to happen. We'll see how the DAX tomorrow, Thursday, Friday, how it handles this resistance level. But really, it should be able to take on that area. So that closed up, 257 points. The FTSE up 122 points. You know, we don't spend too much time on the international markets out here. In the case of the FTSE, a nice move today. It just has a natural area of resistance, really right about here, right about at the lows of July 7th. We can see how that area should have acted as a support level, but price cruised right through it on August 19th. with the rest of the markets around the world. And we can see how that area really is acted as a resistance zone. Price moved up into it October 9th, back on October 23rd, most recently on November the 4th. So that's the key level of resistance that the FTSE needs to get above in order to change from what is currently a bearish consolidation at the bottom to being able to go ahead and move higher. Goldilocks, gold off $15 right now, trading at 1068. Silver's off 3 pennies. Light sweet crude is off 88 cents. Natural gas back a bit. High grade copper off as well. Leading the charge here to the upside dollar wise. Credit Acceptance Corp. It's up $13. That stock has been decimated. Unless there's some type of gap up or sign of strength out here, this is nothing more than a little bit of a counter turn rally. Oh, that looks pretty good. Maybe we'll look at that. Regeneron Pharmaceuticals up $12. Bluebird Bio up 10. Airgas up $8. Netflix up 8. To the downside, Athena Health off nearly 8%, down nearly $13. Adeptus Health, that's off 17%. GNC Holdings down $6, down 21%. Under Armour, that's also to the downside. Now, GNC Holdings, big move to the downside here today, down 21%. Let's just check in on this real quickly. Then we'll go take a look at the rest of the markets. Most specifically, we'll start off with the Qs out here. Now, this thing, I'm going to put this on a monthly chart first, GNC Holdings. So this thing looks like it's headed all the way back to the IPO back in April of 2011. Big volume coming out of this equity last week for it. On a weekly basis, it was 72 million shares. So I don't see anything holding, getting in its way. I don't see any breakout area, certainly on the monthly chart. If we take a look at the weekly chart out here, yeah, there's really nothing to stop this equity from making a 100% move and at least getting back to the breakout from March of 2011. That's GNC Holdings. I hope none of you are holding on to that equity. Now, let's go check out these markets here and see what they're doing. Now, we're going to first start off by yesterday, we spent quite a bit of time on the NDX 100 because my belief is that the NDX 100 is going to be the area that gives us the most information about what the market wants to do. So let's start off. We'll take a look at the Qs. We'll take a look at the NDX. Really, it's going to be, in essence, one and the same. But let's take a look at the Qs first. So what do we know about the QQQ series ETF? This is the weekly chart. Let's take a look at the daily first out here. And what we know is on Friday, we saw a nice gap to the downside. Now, it might not have been nice if you were long the market, but nonetheless, we saw a gap down. We saw that nice little island top reversal. Now, that's not nice because that's about as bearish as you get. Now, my experience is, and I have a lot of experience in looking at just simply hundreds of thousands of charts out here. My experience is that the island tops that form inside of the indices, inside of the index ETFs, are somewhat new. And we talked about this on Friday because it was a question of which irregardless, which I don't think is a word that I use, or irrelevant. So and it's not irrelevant. You cannot ignore an island reversal. But my experience is that they don't mean as much on a index ETF or an ETF that is tracking some type of commodity. Where they have meaning, real meaning, is in the case of individual equities. As an example, so we do not have an island top reversal inside the Qs. So let's just simply get that out of the way. And the reason that we don't have that is because the Qs were able to trade up into the low, which was 111.96. You're actually 112.15. It does not have to close inside of the 111.96 in order to negate the island. It's already been negated just simply by being able to get back there. Now, that does not mean that the 112.07 area is not a potential resistance zone. It was old support, which failed to act as support on that gap up on October 23rd. When price broke down below it, the question becomes, is old support going to become new resistance? So if we do see it close below 112.07, and more specifically, you probably would use the low, really, of November 12th, which is 111.96. So that's the number I would be paying attention to. And you do it on volume lighter, less than 52 million shares, which looks like that's a foregone conclusion. You're only doing 16. Then it's just really up against the level of resistance. But that island top is gone. Sayonara. See you later. Now, that's different than if we were to take a look at, for example, BIB, I believe, had the island top out here that is still in place, or Apple. So here's your island top, and and this is still in place now. The island top is about as bearish as you can get. Look, Netflix has not Netflix, but Priceline has one. PCLN. Of course, in order for the Qs to have island tops, some of its more weighted holdings have to have them as well. But if you take a look at, and this is all-time highs for Priceline. Now, does this mean that price will not get back there? It could. There's no high volume up at these tops out here, at these highs that were formed. A little bit of a breakout on October 30th. Price made a higher high, a little bearish engulfing, key reversal session, the whole 9 yards on November the 5th out here. And then that gap down on Friday. Now, where you can see it looks like a little hammer candle yesterday, but really, as we have discussed before, you've got to fill in that gap to the downside. In this case here, the gap, because that would really not be a hammer candle if it had opened at the prior day's close out there. So what Priceline is doing, if we let's look at our market profile, see if there's any levels of support out here, just some natural areas on a weekly and daily. And so we've got weekly. We've got potential new market profile out here on a weekly basis, the 1243.31 level. If price moves below that, we likely see Priceline get all the way back down into the June 29th area out here. That swing point somewhere in the range of 1130 or so and change. But those, when you see the island tops on individual equities, not the ETFs, they just simply work better. Island bottoms as well, they have more meaning. But that does not mean that you and I disregard what might be taking place inside of the indices out here. It's just I want you to know which ones actually work better out there. Now, volume-wise, we mentioned light volume inside of the Qs as we go back to it. Right now, about 16 million shares in 3.5 hours of trading. 16 million says we do probably about maybe 30 million shares today. Remember, that gap down was 52 million shares. But remember, volume's only one metric out here. And we talked about this yesterday, so let's go talk about it again today. Let's take a look at what's going on right now as we take a look at the NDX 100. And as we take a look at the NDX 100, I'm going to go ahead and get rid of that island top box out there because she no longer exists. Of course, I think this is the chart where I might want to keep it. Yeah, this is the chart that I want to keep it. Let me just show you as an example. This is, some of the stuff that subscribers get to assist them, or I assist them, like yesterday morning. On Friday, I had told subscribers that we were looking for a market bottom. We were 1 day away, right? That market bottom came in yesterday. I had subscribers that I spoke with for, Sunday evening about the market. The question was the market going to fall apart? And of course, what I said, provided a couple of charts out there, was no, the market was forming a bottom. And that bottom came in when we took a look at that hammer candle on the 2-hour chart after between 6 o'clock and 8 o'clock in the evening out there. And the question was, well, what about these? What about that huge bearish reversal signal inside the NDX 100, that island top? And voila! If we take a look at simply, the trend is your friend. The trend has not been broken inside the NDX 100. If anything, it's it's in a new set of rising price channels out there. It's second level, it's second floor. And what we noticed here since March of 2009, as an example, the red arrows on my screen out here. These are the other island tops that had formed inside of the NDX 100. The first one showing up back in the April of 2012 timeframe. Another one out here, a beauty, in January 2013. Another one in August 2013. They all failed. Remember, folks, there is nothing more bullish than a failed bearish pattern. And this one is a doozy. But when we get back, we'll talk about what's really important today, and that's the Golden Cross. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 45, S&P is up 4 as we speak right now. So back to the NDX 100, as we discussed yesterday, as we are discussing today, probably the most revealing indice for us to track and follow. Number one, it had that potential island top. Number two, it's been the leader on the way to the upside. So we want to really learn from strength and what is its message to us. Now, subtle, so subtle out here. You know, we hear the when the death cross occurs, that's when you've got the 50-day moving average crossing through the 200-day. That's the simple moving average. News media picks it up and they go hog wild and they tell you, you know, because of the name, you know, that basically the idea is that the market's falling apart. What you and I know is by the time you get to the old death cross, the market is basically installing, bottoming, moving sideways formation. Sometimes some markets move slightly lower out there, but typically it's more of a pause point than it is the end of the world. However, nobody celebrates. Well, you and I do, because you guys have the RSVP. You're here at 1 o'clock every afternoon. And so you got that invitation. That invitation was, hey, we might be having a golden cross party today. Now, that's the kind that is worth popping the Dom Perignon if you like champagne. But perhaps you know, if it was Thursday, it would be Sake Thursday, and we'd open up a nice bottle of Junmai Daiginjo sake out there. But what we've got in place here right now, as we speak at 1:25 in the afternoon, the 50-day the simple moving average out there, let's not confuse them, is priced at 44.37. We'll call it 44.38 because it's 87 cents, so we'll round to the upside. And the 200-day is 44.35. So we've got the potential of a crossover. Now, I don't know how the day is going to end out here. So this might just be a kiss and tell, or kiss and don't tell, or just simply a deflection. The reason why I say that is if we take a look at what's going on the 30-minute chart, right? So we're going to go from, weekly, daily. Now we're going to look at a 30-minute chart out here. We've got a pattern inside the NQ that says not so fast out here. What do we mean by not so fast? We mean that price has been moving higher since about the time frame of 4 o'clock yesterday afternoon. So the market's been drifting higher and doing it with less relative strength out there. That's why we've got those lines, diagonal lines on the top of my screen. And what took place here, there's a couple. So we know where the bulls and the bears are hanging out here. So price was moving higher, doing with less relative strength. And at the 12:30 time frame, we had a nice little bull sash, bullish engulfing that candle out here. And then price moved lower. We can see it right now. It's trading right into the top of its TAS 30-minute profile out here in the 45.77 range. As the market moved lower this morning, we had that same kind of pattern. Price was moving higher, little bearish engulfing candle that showed up at 7 o'clock in the morning. We saw the sell-off inside the futures, and we had two little hammer candles that showed up. The first one at 10, the next one at 10:30. So it's at these lows, which inside the ES Mini, to give you the exact number out here, that's going to be the price point of 45.88 and a quarter. That's going to be the key level of support. Now, these patterns, where price moves higher, does with less relative strength, or where price moves lower and does with less relative weakness, they are key to paying attention to. Why do I say that? I say that if we just take a look at the Dow futures, let's take a look at the Dow futures on Sunday night. I believe we had that same pattern out here. Yes, we did. So we had Sunday night. Whoops. I don't want to do that. Sunday night, when the futures opened up, we had a little gap down, price moving lower with less relative weakness out here, a hammer candle that had formed. Now, we had to account for the mere fact that there was this gap. So, is it a hammer? Is it not a hammer out there? Bottom line was that put in the low with price moving lower. So now we're up, and on the 30-minute chart, you can see here for the Dow futures, even worse than what we not just looked at with regard to the ES. Why? Because we're also in a seventh wave move to the upside. So this says that what should likely happen throughout the day is we ought to see more of a sell-off. And that sell-off says, guess what? Inside the NDX 100, it was just the first kiss. And I don't know if we'll have the crossover today or not. If we do, because this pattern here says on the shorter term basis, expect the market to retrace or pull back. And after a day like yesterday, after an evening like an early morning like the markets have had, I mean, a huge move off of that Sunday low out there. So it would make sense to now, what does that mean? Well, then it would mean inside the NDX 100, if we just have a kiss and tell, and we just simply see price reject that gap down, what we know is, hey, we're at resistance. The market is really trying to take on a resistance area, and it hasn't thus far, and that's the message of the strong indice out here. If you and I don't know why I keep hitting that button, it's the wrong button to hit, but if we go take a look at what's going on inside of the VIX index, its message is not so fast out here. Why? Because it's priced out at 1843, and that 50-day exponential moving average, not a simple, is priced at 1777. And that says there still could be more damage to come. Liquidity is drying up a bit. The liquidity gauge needs to get underneath that 1777, that one-arm bandit out there. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow up 35, S&P up a couple, the Russell turning just slightly negative out here. I didn't do okay, good. I thought I deleted that chart again. Didn't want to do that. If we take a look at Goldilocks, now this is really interesting because a couple different things we want to look at. We can see that it's moving lower this morning, but it's doing, or this afternoon, but it's doing it with less relative, with light volume. So go back and we'll take a look at that. That just screwed that up just a tad. Basically, this shows a cycle. Now I've got to move it around just a bit. Darn it. Well, I'll just come back. Basically, we're really right around the time frame when a cycle low is due inside of gold. And this is longer-term cycle, so we don't have to be right to the month or anything like that. I'll go back and line it up again, maybe during a breakout here. That doesn't really matter with regard to what it is that we need to take a look at first right now. So first, let's take a look at the gold contract. This is a weekly chart that we've got up on our screen. And so what's under fire here is the July 20th, the week that began July 20th, that swing point. This happens to be the December contract that that we're looking at. So your A to B equals CD price projections out here. You've got 1031. This is a small A to B equals CD pattern. So 1031 to 987 is the likely target. Let's take a look at expansions of the last set of swing points out here. So that set of swing points being the low from that week of July 20th up here to the October 12th. Now, just give me a moment here so I can add the expansions to this. So we'll take a look at the 1.272 expansion, and we'll take a look at the 1.618 expansion. So that puts us right in line with 1041 to $1,000 out there. So that likely becomes the target here for where gold is headed. Now, the ideal situation is for gold to keep moving lower with some light volume out there. Let's put this back on the daily time frame out here. Now, there's no market profiles or anything for you and I to take a look at. So there's no logical support there. Actually, if we go back to that continuous contract out here, let's do that. That's the monthly, but let's put the weekly time frame up here. I don't believe on a weekly. Let's see if we can identify a swing point or some type of bullish reversal signal. There's really not. When we take a look at where gold may be headed to, the next swing point out here, here's where it would look like to me would be the target. We'll go ahead and put a horizontal line. It would be the high here from March of 2008. Which is lining up with the swing point, approximate swing point from February of 2010. So that says about 1,033. So we're really in that range out here. You're 1,069. It may not feel like that range, that's only another $40 or so to the downside. $40 or more because we had that 970 out there. Now, if we go back and we take a look at the GLD, so we use that just simply to get our volume metric, you're going to see the light volume. So far today, 5.2 million shares. Now, the swing point that it's dealing with, that it's trading below, is the July 24th level. That's got volume of 11 million shares. So today, the estimated volume, straight line volume, says about 8 million shares. So you can see we're below that swing point on lighter volume. And what you and I want to see is we want to continue to see gold push lower, continue to do it with lighter volume, because what that's going to set up for us, that's going to set up a nice buy, a very nice buy out there. So it's on the way. It's coming to a trading screen near you. It's just not today. It's not here right now. If we go take a look, let's go see how some of these mining equities are holding up or how they're not. Let's look at the strong ones out here. Let's look at what used to be the strong ones. Let's look at Agnico Eagle, down to $1.26 on 1.1 million shares. Agnico Eagle still holding up pretty well. Let's take a look at retracements. Just a simple retracement off the September 11th low to the high out here on October 15th. You're really right at the 0.618 retracement. It's been down here before. Gap down last time on November 6th with 3.3 million shares. So far today, 1.1 million shares. That 1.1 says you do about 1.8 million or so. So you're coming back with light volume. It's coming back into the candle that it broke out with on September 24th. That's got 6 million shares. But that gap out there really becomes, the target. The gap I'm referring to is right around 23.82 to 23.59, and the 0.786 retracement down around 23.25. So I'd really like to see this gal, Agnico Eagle, continue to move lower, pull back into that 23 and change level out here, and do it with light volume. Because what that would set up, won't set up a Gartley buy, unfortunately, because the A to B equals CD pattern that you've got in here, that takes us to a much lower price. That probably takes us, well, that's not used probably. Let's see where that takes us to, all the way back down to the lows from September 11th. Now, look, that may be the case too, which sets up a nice buy if in fact it can get down into that $20 range out there, because if it does that, you've got another swing point to go against, which has volume of 3.3 million shares. So that's Agnico Eagle. Let's take a look at the Franco Franco-Nevada, FNV. And then let's take a look at, somebody wants to look at NGD, Great Panther, and Pass. So we'll look at the silver market as well. In the case of Franco-Nevada, so today you've got 495,000 shares. 495 says you do about 800,000 shares. It's taking out the swing point with light volume. That's referring to November 6th. It's coming into the breakout area, that at 1.4 million on October 2nd. So you've got a nice, another nice. Now this one here does set up a Gartley buy pattern. That Gartley buy pattern, but look, you've got to get the entire sector. But if we go from the low, that hammer candle on September 11th, up to the high out here on the trading day of October 28th, it's really at the Gartley pattern now, but you can't do it, because Franco-Nevada's not going to go in the opposite direction of gold for very long out here. But it's still looking pretty sweet. Sweetheart rock out here. Now let's take a look at Gold Corp, GG, one of the uglier looking stocks out here. Now we've got to put this on a longer term time frame to get some kind of feel. Then we'll go take a look at those others for you, Mike. And the Tiger stand, and basically this is atrocious. Down below the swing point you would have thought would have held the support from October of 2008. It hasn't. So Gold Corp has got something else going on inside it. Now the problem is that inside the Gold Miner Vectors ETF out there, Gold Corp happens to represent one of the, it's number one or number two as a weighting. Maybe it's getting less and less each day with regard to maybe it gets knocked the heck out of there. So where's Gold Corp going to? I don't know. I don't really know out here where Gold Corp is going to. Lower prices, basically, probably 10 and a quarter or so next, 633. I don't know out here. Let's go take a look at a couple of these other ones, and I'll give you a feel for where gold really makes the bottom. And it's not where you think it is. It's not where you're going to be watching for. Well, it will be if you're tuning in here, because I'll go ahead, I'll give that to you. But NGD, New Gold, I believe, is the ticker, is the name out here. Oh, this looks ugly as well. There's just no other way to call it. It's at $2.13 on the weekly chart. It's just basically, looks very nasty out here. So it's not the place where we want to go ahead and make an investment because we'd rather be in Agnico Eagle or Franco-Nevada or something else. But in the case of New Gold, it's getting back into the swing point here from August 25th, doing it with, it's 1.7 million shares already. 1.7 says you do. Yeah, see, this is just ugly. So we took a look at the GLD. We've taken a look at a couple of stocks. We've seen them coming back with light volume. Not the case with the New Gold out here. The swing point's got volume of this one right here that we're looking at, 4.2 million shares. And volume today looks like it'll do 2.7. Actually, I take that back. It's also really somewhat lightish volume. But it's going to make its way, I would say, Mike, it's going to make its way back into the 190 to 201 area. But what this stock struggles with is really the signs of strength out here. Let's look at now PAS, PAAS is a ticker symbol, Pan American Silver. This ought to be pretty good. Well, today. So you got silver not doing a whole lot today, but that's not the case with Pan American Silver. Down from a high today of 704, you're at 644. So percentage-wise, that is, 5-6% already today. The most recent swing point just a few days back had volume of 1.9 million. You're at 1.6. So this is starting to look like it's a sick animal out here. Looks like PAS, PAAS, headed back to the August 26 level. May not hold there, but looks like that's where it's headed back to 585, maybe 617 out here. Great Panther. Let's go take a look at Great Panther, see what that is doing. Now, if you're in Great Panther, that's a stock. That's the type of stock you want to have an unexpired option in, not necessarily really use this for trading. That means, anytime you take a long position in this, just take 1% of your working capital and just simply divide it by the price if you're buying it today by 44 cents. And that's how many shares you buy, and you stick it into a drawer, because it does have some nice high volume highs that are in the $5, $3 to $5 range. Eventually, at some point in time, maybe it makes its way back there. But as far as where this thing is headed to, it's so hard to figure out with that day of June 19th, that big volume day. I think they maybe issued more shares or something along those lines. And it makes it hard to figure out where the stock is headed to. The best thing we could do is see if there's some kind of market profile support. There's not. It's below everything. And so I don't know how to get a read for you on this one other than to say, it's not going to go against the grain of the market out here. So until gold and silver turn around, it's not in the cards. Now, everybody's going to be looking at gold priced in dólares, not you and not I. Because we know that gold tends to find its support in gold priced in euros out here. It did last time, and it did the time before that, and we all benefited from that, didn't we? Because we were paying attention to that, as well as a couple of other tools that we use out here to understand when gold and silver makes its turn. Now, what both you and I know is gold priced in dollars, gold priced in euros, which is the bottom panel of my chart. Price broke through that level. And really, as soon as it broke through it in euros, it was like, that is not a good scene out here. Now, the good news is, even though it's moving below the swing points priced in dollars out here, where gold has typically found its line of support / resistance, old resistance, now pretty much new support, is right around the 1,000 euros. I've got it listed as 987 out here, so we're going to use the 987 level. It's priced right now at 1,004. So what you and I want to be watching is when gold gets back to about the 987 level, maybe it's a swing point from September 10th out here. I don't have my data window. That says that would be the equivalent in euros of somewhere between 1097 to 1111. No, that can that be? No, my apology, reading the wrong thing. 972 to about 984, so that 987. So that's the area where it looks to me like when and if gold gets back to that level, that's what we want to be paying attention to. Because in gold price in dollars, we're going to be scratching our head saying, is this the time? Is this the time? Is this the pattern out here? Kind of like Rosanna Dana, would do. And we don't need to scratch our heads. We need to know that that's probably going to be a good level support. It's at least going to be the one that we're going to look for. And then we're going to see if, in fact, it holds. Then we're going to look for some type of bullish reversal signal. And then if we see it, then we're going to fire away regardless of what gold priced in dollars is doing. It worked last time. It worked the time before. It's going to work. Third time is going to be the charm out here. And so that's what we will pay attention to. But otherwise, inside the world of the metals market out here, it doesn't look good. The prognosis, and it looks good from the standpoint we've got light volume. That part is good, but it looks like more price destruction is ahead. Light sweet crude, let's go take a look at it. Let's take a look at natural gas, see what's going on there. In the case of light sweet crude, back below and trading inside that swing point from August 24th. Pretty darn good chance that we're going to see 39.22 tested or blown away out there. I don't know which it's going to be, but it's likely to be at least tested out here. The U.S. dollar index, let's take a look at it. And the euro, U.S. dollar index up 21 pennies, up 99.77. What is it doing out here? It ain't stopping, that's for sure. But it is going to be stopping soon. I was looking at the commitment of traders data last night, early this morning, and you know that I pay attention to it most definitely with regard to metals out here, and I have paid attention to it and churned the numbers from time to time inside the U.S. dollar index. You can take a look at that, and actually, and this is gonna, and I don't know how this is gonna happen, but in looking at it, it's actually setting up. Commercial traders are starting to exit their net long position inside the U.S. dollar. Which, I mean, I was scratching my head last night. But it takes them a long time to get that position totally in place out here. They're huge ships. They're luxury liners out there, those commercial traders. So what do we know about the U.S. dollar index? When is that likely to happen where it's going to make a turn? Well, one spot, the logical spot, the most logical spot to me is the 100% move of a move. Right? We know that when prices make a 100% move of a move, they often do something different. It could be just consolidate sideways, or it could be to see some type of larger retracement out here. So it looks to me they're setting up, believe it or not, and the world's going to be saying everything other than what I'm communicating to you here. Maybe, I mean, with the exception of some other guys here at TFNN. So likely what we're to see is U.S. dollar index move up to 102.45 out here. The 1 to 1.618 A to B equals CD is at 100.35. And yeah, there is a swing point out here, and it is a version of 100% move from April in 2015. But I think more likely it gets back up here. So we have some time. It would be ideal for that to set up, and then the euro to put in a at least a tradable bottom, and then put all that with gold, and we wrap it all up, and we have a good time. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 60. Even Steven S&P is up about 4. Composite up 14. We haven't taken a look at any of these individual stocks to see how they're performing. Credit Acceptance Corp. Let's look at that. So it's up. That's a leader dollar-wise. Point gainers up $12 out here. If we take a look at the daily chart, what's behind the move? Was there an earnings? No. At least I don't see anything out here. So volume today about 219,000 shares. If we look at this thing here, put this on a monthly chart out here. What is this pulling back into? Nothing that I see monthly wise of significance. Weekly in Credit Acceptance Corp. Now, the weekly basis, you get a nice big old reversal candle out here. So you got a nice big bullish reversal candle on a weekly basis at the retracement level of where's it at? Just slightly below the point. Well, it's been between the 0.618, 0.786 retracement level. It is running right into the weekly profile. So we've got a weekly chart up, nice big old bullish candle. You'd have to say that if CACC versus GMAC can close above this week, the 185.52, you're trading at 185.52. No, 186.86. Hello. So 186.86 is the number. If it closes above that, we should see a move to 203, maybe even 219 out there, and that is CACC is the ticker symbol. Regeneron Pharmaceuticals up $12, up a couple of percent. It's the weekly chart that's up on the screen. This looks okay. It's trading back into its swing point from August 3rd that had 4.8 million shares. You were up into it with 5 million shares just a couple of weeks ago. So it looks like that top wants to get hit. That's 605.93 inside of Regeneron, so that looks pretty good. To the downside, let's take a look at a couple. What did we notice here? Dick's Sporting Goods, DKS, that's off 11%, down $4. Oh my goodness, did I delete the chart? No, it's right here. Okay. Dick's Sporting Goods, let's take a look at what the heck's going on here. There's an error here. We can fix that in a moment. There we go. So as we look at Dick's Sporting Goods, volume today of 23 million shares to the downside. That's pretty big volume. It's trading back into what? Broke out with 15 million shares. So it's not trading into any volume bar whatsoever. Broke in a swing point with volume on the way down. First time it's done that in quite some time. So where is Dick's Sporting Goods headed to? I just rely upon just a natural retracement level out here. Looks like it should try to find support around 28.72 or so out there. Also to the downside out here, we've got ticker symbol Athena Health, ATHN. Let's look at Adeptus Health. ADPT down 17%. Oh, that looks basically sick as well. So we take a look at a number of sick things out here. Where's this headed to? I don't know. It's headed lower, is what it looks like. Because this could get all the way back to $28. You're at $49 as we speak right now. Okay, let's finish this off. So what is it that we can expect? We want to watch the NDX 100. You want to watch where it closes, right? We took a look at that. If this thing can close the NDX 100, if that can close above $NDX, can close above the gap down, that would be short-term bullish because we'll have closed over resistance. That means close above 45.88, and you're at 45.33 as we speak right now. Remember, even if you close right here, you're going to have that golden cross out there, and that does not suggest being short. It suggests that Santa has arrived. Speaking of Santa, stay tuned because David White will be up next after David. Because it is Terrific Tuesday, we got Tom O'Brien from 3 to 5 and Andy Heck to take it on home. Have a great Tuesday, and I look forward to seeing you on wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.